Dear viewers, this is our weekly program Expert Speaks. The topic that I have picked up for discussion today is how you can structure your housing loans for the maximum tax benefits that you can derive by taking these housing loans. This is NRI Money Clinic for you, and I am Dr. Chandrakant Bhatt, your financial guide for a happy living.
NRI Money Clinic. No hype, just the right advice.
Dear viewers, to talk about the subject of the week, how to structure your housing loans for the maximum tax efficiency, I have brought to the studios my one another eminent faculty, Chartered Accountant, CA Royson Anil Sikwara. CA Royson Anil Sikwara is a very young Chartered Accountant who has become very popular at a young age. He has mentored so many students in their pursuit of Chartered Accountancy courses. Mr. Sikwara specializes in forensic audit and fraud detection. He also specializes in income tax matters and in GST law as well. He has become very popular with his television shows. He has simplified a lot of tax codes for the benefit of the general public through television appearances and his participation in various debates and in public appearances. A man who has become very popular in the community of his clients and in the general public as well. Welcome to the show, Mr. Sikwara.
Thank you.
Mr. Royson Sikwara, I have picked up a topic for you today. A common topic which is bothering a lot of people. Everyone takes a housing loan at one point or the other point of time in their life. As a tax expert, I want you to tell for the benefit of my audience how they can take a loan, what benefits are there, and by structuring it in a proper way, how they can maximize the tax benefits which is available under taking the housing loan scheme. The first question to you is, housing loans, when somebody takes, is there a tax benefit or not? If it is there, what kind of a benefit somebody can derive by taking a housing loan?
Having own home is everyone's dream. Even government also thinks in these terms, and housing for all is also supported by government. So whenever someone takes housing loan, we know on repayment of the loan there are two components, interest as well as principal. So one can avail deduction of interest as well as principal whenever there is repayment of a housing loan.
Okay.
Interest deduction up to 2 lakh is available, and principal deduction is up to 1.5 lakh is available from total income for income from house property in the case of residential properties.
So when you say income reduction, it means it is not reduction of taxes, but when you are filing the tax return, 2 lakhs on the interest that is paid and
Yes.
1.5 lakhs which is paid on the principal amount is deducted from your taxable income. Is that correct?
Yes, that is the maximum limit
Yeah.
that can be availed as deduction from the total income. You can deduct 2 lakh of interest and 1.5 lakh of principal. Maximum 3.5 lakh can be reduced from your total taxable income. Whatever remains, we have to pay tax accordingly.
Right. So whatever the tax slab one individual could be, to that extent, from that tax slab it gets reduced.
Yes.
Right?
Yes. So basically, interest of 2 lakh and 1.5 lakhs in the case of residential properties.
Okay.
In the case of let out properties, there is no bar with regard to income deduction. Then you could be of the opinion that any amount can be claimed as income deduction. It is not that. You can set off maximum up to 2 lakh in the year, and rest can be carried forward for the upcoming years in the case of let out property.
So it can be carried forward.
Yeah, it can be carried forward. The additional payment of interest in case of residential properties also, let out properties also, if there is loss, you can carry forward.
Right. But set off is only for 2 lakh rupees per year.
Yes, yes.
Okay. Mr. Royson Sikwara, these days husband and wife both are working. Both have got a stream of income. They will go and buy one house. What is the best method that they can adopt so that they can get the maximum tax benefit? Say one of the two is earning a higher income, he should take the loan, or the person with lesser income should take the loan, or they should take a joint loan. In which particular combination the maximum tax benefits can be derived by a family?
When I get this question, I can look for two possibilities. First one is both the husband as well as wife, they are earning good. If they are earning good, that means it is a bigger home. More the big the home, more the loan. then there can be more of interest burden as well as more of principal burden in repayment when it comes to EMIs. In this case, it is best that you jointly register the property and take the name of the loan also in the joint name. Then the best advantage is you can avail up to 2 lakh of interest deduction in case of husband as well as in the case of wife. So it will be 2 lakh plus 2 lakh, 4 lakh.
Okay.
And on the repayment of the principal, it can be 1.5 lakh, 1.5 lakh, both in the case of husband as well as wife, then 3 lakh.
Okay.
So totally if you can add up to 4 lakh as well as 3 lakh, it will become 7 lakhs. So if you are on 30% slab, if you take 30% also, it can be 2 lakh 10,000 of flat tax savings.
Okay, that is if both husband and wife are having income, and that's the way you do it.
Yes.
But in practical situation, I'll tell you sometimes what happens. Only husband is working, most of the cases,
Yes.
or maybe only the wife is working, which is a rare case. Then is there a specific advantage by registering the property in a joint name, or is there a benefit, the tax benefit they can get in case if wife is not earning or one of the spouse is not earning?
In this specific case, if husband is earning member or only wife is earning member and husband is not earning member, and if let's say the amount of loan is small, then it will be division of interest as well as a division of a principal amount of the repayment. So technically husband also will be losing in the claim of interest as well as in the repayment of the principal amount. When it comes to wife, let's say one of the spouse who doesn't has taxable income or who is not at all paying the tax, it is completely losing the opportunity of claiming the tax benefit over the interest as well as the principal amount. So to consider, if both husband and wife are good earning members, only then you have to take it as jointly, or else proportionately you have to work upon. If husband is a good earning member, then it is better to take only in the husband's name, or if wife is the only earning member, it is better to take only in the wife's name rather than making it jointly.
So to summarize it, if both are earning members, it is better to take a housing loan in joint names. If one of the member is a earning member, it is better to take a housing loan in the name of person who is earning
Yes.
in the family.
Correct.
That's a better one.
Yes.
But even if somebody has taken a joint housing loan where one of the spouse is not working member, for the person who has taken the loan, that 2 lakh limits under interest payment and 1.5 lakhs in the principal amount is available.
Available.
Right.
But if the loan amount is such that if it is a short loan amount, then obviously on whatever interest you pay and whatever principal you pay, it will be divisible.
It is divisible at the fag end of the loan period where it drops below a particular level. Then the benefits will not come to the
Maximum limit that is
you
available.
will not be able to use
Yes.
it because it gets divided between the two.
Correct.
Understood.
Correct.
Right. Mr. Sequeira, in practical conditions, I will tell you some of the variations that can come or some of the possibilities that might play out. For example, somebody has taken a housing loan
Okay.
and he claims a tax deduction under income principal amount as well as the interest that he has paid.
Okay.
When he goes through this exercise, his income falls below the threshold limits of 2.5 lakhs.
Yeah. Okay.
He is not liable to pay any taxes.
Yes. Yes.
Now the question that is there in my mind is, should he file tax returns or not, or should he file tax return and say I am not liable to pay taxes, or just avoid filing the returns?
Correct.
What's the right thing to do?
Nowadays there is one common trend in the market. The threshold limit nobody looks into. People think that if their income is below 5 lakh, then they don't have to pay tax. This is the new trend that is running in the market. But we have to remember that in order to claim any deductions or exemptions or rebate or relief, we have to file income tax return. In the case that I just discussed, interest deduction and principal deduction, it is available only on filing. It is not based on your computation.
Okay.
So file the income tax return and avail interest deduction and principal deduction. Even though your income later on falls below slab, it is justifiable, but you have to file return to avail these deductions.
Okay, only upon filing the tax return you get a right that yes, I can claim the deduction,
Yes,
but you
yes.
can't be under the assumption telling
Correct.
that, oh, my income slab has fallen below 2.5 lakhs, I am not liable to file the tax returns.
Yes.
No, that's not correct. You have to file the tax return, but that should be substantiated by whatever the tax codes are, how much is the limit that you can get against the principal as well as the interest that you have to
Yes.
pay on the housing loan. Mr. Sequeira, we discussed about the housing loan when a person takes for the first time. But in practical situations, particularly I have seen in case of NRIs, they have got multiple houses and many of these houses could be vacant.
Yes.
Now, are there any obligations for such owners towards taxation, whether they have a loan or not is secondary issue. I am just asking you a follow-up question here.
Okay.
I have got multiple houses, they are lying vacant. Is there any tax liability to the government because of this situation?
Just to be specific about NRIs, because you mentioned NRIs there, yeah, many of the people might have properties here which are lying vacant. But we know the fact that if they have any income source in India, then definitely they have to pay tax on that matter.
Okay.
If a NRI, let's say he has 4 or 5 houses lying vacant here, we can assume that only 1 or 2, okay, 2 properties has a self-occupied property.
Okay.
The rest of the 3 properties, it will be deemed let out properties.
So it is vacant,
Yes.
but it is treated as deemed let out. Okay.
Even though it is vacant, it is considered as deemed let out and you have to discharge the tax accordingly.
So when you say deemed let out, who decides how much is the rental which is collected there? What is the parameters used there?
Yeah. There are different parameters. We have to arrive at gross annual value.
Okay.
We have to consider what could be the municipal value, what could be the fair rental value, or what could be the actual rent receivable. Whichever is highest will be considered as deemed rent.
Okay.
Out of that, we can avail the municipal taxes paid, standard deduction of 30%, and based on that, we have to file income tax accordingly.
But who decides how much is the rent deemed to be collected? Is there a formula which is available for this, or is it the chartered accountant's arbitrariness which will decide it? How somebody can file tax return telling that this is my deemed income from these vacant properties?
Just now I told you that we are paying municipal tax.
Okay.
That means based on some criteria that they have municipal taxes means the property has the earning capacity of that much of the income.
Okay.
So based on that we have to arrive the rent that is receivable, or it could be such that area wise also we can arrive at the deemed rent. In this area this could be the possible rent that is collectible. Based on that also we can arrive on the actual rent receivable.
But it's a difficult situation to arrive at. This is the exact thing. Somebody may get 10,000 rent and he may say that my deemed rent is 5,000.
Yes, yes.
So the point to note here is that if you have kept the premises vacant, it attracts taxes and it will be treated as something that it has been deemed to have been let out, and you have to pay taxes as per your slab rate, taking into consideration the income that might come by letting out this particular property. Is that a correct
exactly.
statement to make?
Yeah.
Mr. Royson Sequeira, in practical situations, a lot of things could happen. One of the things which I have noticed particularly during pandemic is the housing loan is running. People have lost jobs or they don't have a stream of income. Interest is getting accumulated, but the person who has taken the housing loan has not repaid that interest. Now, can he claim deduction when he has not paid the interest to the bank? How does the law treat in this case?
Generally, sir, yes, whenever there is financial difficulties, in pandemic, even now also, people just constantly push their EMIs or they debit the amount in such a way that account is just skipped getting a NPS. But when it comes to the provisions of the law, we have to look into this aspect that the interest available as deduction from the income based on accrual basis, it is not on the payment basis.
Whether you have paid or not is secondary. But it is a liability which has been created by accrual of interest.
Yes.
So if it has accrued, then you can claim a deduction even if you have not made the payment.
Correct. Yes.
Is that a fair statement?
Yeah, it is a fair statement. It can happen that if account becomes NPA, bank definitely won't charge interest to that account.
Right.
So the situation here is that constantly interest is getting debited and this person is just trying to protect the account from getting NPA. So in that case, debit also will be there, but payment will be comparatively less. But the moment it is debited, even in spite of not paying, you can avail it on accrual base.
Okay, right. Mr. Royson, see, housing loan is a big project for any family.
Correct.
It's a life goal.
Yes.
At the time of taking housing loan, it is a big circus in the family level. They have to bring down the margin money. Sometimes the bankers say, I will not be able to give you so much of a loan or anything like that.
Yes, yes.
What people do is, they take loans from their friends and relatives.
Correct.
Right?
Correct.
They make parallel arrangement, not going to the bank, they have to bridge that margin money or whatever it is. My question to you is, if a person who has taken a housing loan has made parallel arrangements for finance from his friends and relatives, can he get an exemptions for the interest paid as well as the principal amount paid on such borrowings in the private sphere?
Actually, many people don't know about this opportunity. They just think that for the interest claim, they have to avail loan at bank or NBFCs.
Okay.
You can take loan from the relatives or friends for this purpose, and you can take the benefit of the interest,
Okay.
but you cannot take the benefit of principal repaid. You can take the benefit of interest, but again, how you borrow loan, that is very, very important, because if you borrow loan in cash, whatever you borrowed in the cash form, it will be added back to the tax slab. In the sense, there is 100% penalty on loan that is borrowed on the form of cash.
Okay.
So my suggestion here is, if you want to take loan from your relatives or friends for the purpose of housing loan, it is better you make an agreement with them. You state by facts that this is the borrowed amount from your side at this rate of interest which I am going to pay you. So you take the funds from your relatives or friends through bank account with the agreement by stating this is the interest, you use it, then make the repayment through bank account only, repayment of the interest, and whatever the interest that you paid, it is definitely visible in your bank statements. Accordingly, you can claim as a deduction under the section. But principal repayment, you cannot avail as reduction if you borrowed it from a relatives or
Relatives and friends.
Only interest.
Yeah.
Again, there is a slab.
Perfect. To summarize, if you have taken borrowings from your friends and relatives, it is eligible for deductions under the interest that you have paid to such friends and relatives, but it should be well documented. It should come from the banking channels. The interest that you have paid will invariably get added to the income of the person who is receiving the income on the other side.
Yes, correct.
So both sides it will match. So if you have taken a private arrangement, make sure that it is proper in the eyes of law. That's the thing that you have to keep in mind. Otherwise, principal amount you can't make a claim of that 1.5 lakh which is available. Interest that you pay for such parties can be claimed as a deduction.
Yes.
Right.
Yes.
Mr. Royson Sikwara, I remember one question somebody asked me in the comment section of our channel when we did a similar video sometime earlier. The gentleman says that I have got multiple source of income.
Okay.
To reduce my tax burden, I'll transfer some of the properties to my wife's name or for my son's name. Can I do that? If I do that, will I be paying lesser taxes? What does the law say in such circumstances?
There is a provision in income tax law which we call it as a clubbing provision. Sometimes generally it can happen that, as you said, the person could transfer the property to wife or minor son just to save from the taxes.
Okay.
So if he is transferring the property to wife or minor son, it will come back as clubbing provision. That is, even though you have transferred the property and that property continues to earn, that income that property generates will be clubbed under your income only and you are eligible for the taxation purpose. But there is one exception case. If he transfers the property to wife under the circumstances to live apart, or it is a divorce arrangement. So in that case, if the property is transferred, it won't be coming under the clubbing provision of the husband. And if the property is transferred to son, not minor son, if the property is transferred to son, then the property will be registered in the name of the son. Then the income of that property also will be taxable in the name of the son only, because it is not minor.
Okay.
So that arrangement, with regard to son, arrangement can be made. With regard to wife, that arrangement cannot be made. With regard to minor son, that arrangement cannot be made.
If with regard to wife, if you make, it means that only when you make going ahead with a divorce petition or you are living apart,
then
under such circumstances it can be left out.
Correct.
But it should be supported by documents as well. You just can't say that I am making this arrangement and I'll not club this income. That will not work out.
Correct.
Right?
Exactly. Yes.
Okay. Mr. Royson Sikwara, I will slightly deviate from my topic now.
Okay, sir.
Okay. And lot of NRIs have this dilemma in their mind, and lot of people with lots of deep cash pockets have this question. We have got the money ready to buy the property.
Okay.
Now, what do you suggest to them? Should they take a loan to buy the property, or should they use their own money which they have to go and buy the property? How would you like to answer this question?
let's say sir, there is a NRI as you told, and he is sitting with full of cash. Now, just now I told you with regard to whatever the advantage that you can avail by taking the housing loan. Now we know that housing loan rates 7 to 8%. Let's say I have the good opportunity to make 10%, 11%, 12% in the open market, could be stock market or any other different avenues if I available. Then it is better whatever the cash you have to pool to that investment first, because the return from that investment itself is can manage your housing loan.
Yes.
So you are sitting with full of cash and you directly deviate that amount to buying the house property, then I think you are missing a better investment opportunity. However, if your nature itself is conservative and whatever you have built for a period of time and your dream was itself to buy the house, in that case it is better that you divert this amount to buy the house property itself, because if something happens and the market is subject to the risk, whatever the portion that you have accumulated for the housing purpose itself, then it can miss your hands. So in that case you can route it, provided your conservatism. But if you think that there is a better opportunity to make money, 10%, 12%, 11% by making or diverting that fund to the market, or by having better consultations with financial experts who can provide you better earnings, then that earning itself is enough in order to divert the fund in order to repayment of a housing loan.
Yeah, I remember we have done this video, a specific video on this particular topic. So where I argued that your housing loan comes to you at, let's say, 7%.
Yeah.
And you have got cash in your hand. You are buying a property for 1 crore rupee.
Okay.
And you are taking a housing loan for 1 crore rupee.
Yeah.
Okay.
Okay.
I've got 1 crore cash. The dilemma is, should I use the cash which is there in my bank account, pay to the developer, sit myself debt free,
Yeah.
or use this cash for investing somewhere and take a housing loan and see. And we made a calculation.
Okay.
My argument was very simple. If you are paying a 7% housing loan or 8%, whatever could be the rate of the day, it is a diminishing interest.
Exactly.
Month after month, year after year, it keeps diminishing. It will not increase.
Yeah.
But if you invest the same money and if it gets you the same rate of return as a housing loan, but that is an ascending upward curve, that means it compounds upwards.
Yes.
Right? Even if you get the same thing, in the long run, the property can literally become free of cost for you. It's
Exactly.
a calculations is available.
Yeah.
The human tendency is that I should not have a loan.
Correct.
Human tendency is let me clear off this loan as early as possible.
Yes. Yes.
When you do this, what happens is that you lose this beautiful opportunity of making this house work for you. Otherwise, personally, a house is a dead asset. That's where
Exactly.
you go and live. You block a hell of a lot of money into a house. But investing in a proper way and taking a long-term housing loan, one, you have a tax benefit.
Yes.
The second thing is your properties will also appreciate. You wisely invest this money, and if it can earn you the same rate of interest, or you can get much more than this. See, a well-constructed mutual fund portfolios today can easily generate 8 to 12% rate
Yes.
of return.
Yes.
And imagine the compounding effect it will happen in 10, 15, 20, 25 years. Today housing loan is available for literally for 30 years. Somebody who buys a property at 30, 35 years, so you can take it a long-term housing loan, and that can tremendously work to your advantage. In the videos I have told very clearly, your property you can completely make free of cost. This is something people should get warm up to the ideas, people who have got cash, people who have that psychological makeup that I should not take loan. No, your house should work for you. Instead of creating a dead asset, and many of the NRIs do this mistake of buy a property, don't even rent it out, keep it there, it will become older and you need to pay taxes on that, you have to keep repainting on it, you have to put a security on that. It all adds to the cost. Instead, by a wise movement, you can get the tax benefit and you can also make your cost of the house work for you. Borrow money and buy a house. That's probably the best suggestion that I can think of on this question from my side. Mr. Royson Sikwara,
Yes.
thank you very much for bringing all these answers. These are the common questions that are there in every person's mind. After watching your answers, they have got clarity on should they file tax returns or not. Should they take loans in single names or joint names where both husband and wife have got income, and all these doubts has been put to rest. A big thank you to you for coming all over here and answering this question. I keep calling you periodically to answer the tax queries people might have. Thank you very much on behalf of NRI Money Clinic and on behalf of my viewers. Thank you very much. Dear viewers, hope the video that I have done today could have helped you to understand how you should take a housing loan, under what conditions you should take a housing loan. Should you take it as under your own name or under the joint name of you and your spouse? If it helped you to understand all possible benefits that you can derive by this, please like this video. If you are a person who is watching my channel for the first time, or if you are yet to subscribe for my channel, please hit the subscribe button and press the bell icon. Don't forget to share this video with your near and dear ones. Thank you very much for watching this episode on NRI Money Clinic. I shall be back with you with yet another topic in yet another video very, very soon.
Press the bell icon for more details and subscribe our channel.